Welcome back. It's time now for On the Radar, where we ask an investing professional what they're looking at in today's markets. We're back again with Lenka Martinek. She's managing partner at Sustainable Market Strategies Nordis Capital to talk about artificial intelligence. And you've got a novel take on this. You've looked at the energy consumption of high-end AI applications.
Yeah, so I just wanted to continue this morning on this electricity. We talked about electric vehicles, another area of massive demand for electricity is coming from artificial intelligence, of course. And so, we had this massive run, this really nice run up in a lot of AI-related, some would call it a bubble in AI-related stocks in 2023. If we think about the sort of hype cycle around technology, we're starting to wonder whether 2024 might be a year where we sort of go into a bit of a trough of disillusionment, as they call it in the Gartner hype cycle. And when we think about what are some of the reasons why, artificial intelligence might fail us or whether there might be a little bit of downside, of course, we have a lot more concerns just over the past month in terms of, deep fakes and things like there was some pretty interesting memes going around about some pictures of Trump and others that have been created by AI. And so there's this discussion, obviously, around things like privacy, transparency, honesty, all of these sorts of things. But there's another one, and of course, it's again coming back to energy and electricity. So artificial intelligence takes just enormous amounts of power. The statistic that I like to share is that a query on ChatGPT takes about 10 times more than just a simple Google search. So if you're wanting to know very simple things that Google can answer for you, it's much less energy intensive than asking ChatGPT. And so, the question is, so we started actually looking at, how much energy is, how energy demand is changing, where is it coming from? And one of the things that we uncovered is that in North America, over the last 5 or 10 years, actually the energy demand forecast has always been about flat, between 0.5% for the entire sort of grid system. And the reason for that is as the population grows, actually we're getting more energy efficient. And so we end up not really using on a macro scale much more energy. But in the last 3 or 4 months, the forecast for energy consumption have just skyrocketed, have gone up to about 5% over the next 5 years. So this is quite a big rate of change compared to what forecasters were previously expecting. And the idea here is, where is that demand coming from? Well, obviously it's coming from, things like electric vehicles, electrifying our transport sector. It's coming from, more buildings being heated by electricity rather than fossil fuels. And then the third one, the big one, is really data centers. And this is a part, of course, it can be cryptocurrencies, it can be artificial intelligence, but we're really seeing an explosion in demand coming from this sector. And so how, as an investor, can you play this? So as you know, in the electricity sector, you have the power, the generation, you have transmission and distribution. And so, 2023 was not a nice year, was not a pleasant year for renewable energy stocks in general because of the higher interest rate environment. But what we are noticing is this story about the demand of the transmission. Once you have your power, how do you get it to where it's needed, to the data centers, to the houses, et cetera, et cetera? And it comes through transmission. So who's going to benefit from that? Well, we think it's really the suppliers of the cables, the connectors, et cetera, et cetera. So we're looking at companies like Prysmian Group, Nexans, ABB.
PRY is the first ticker symbol.
Exactly.
Maybe we can get that up on the screen. Go ahead.
Yeah, it was just to say that basically I think this story about the amount of energy demand that is going to need to be connected to the grid is really starting to be sort of become well known. And so we're seeing that. We've seen both of those two companies, Nexans and Prysmian, they've had a nice little bounce in stock prices recently as we sort of, it doesn't matter if it's renewable energy or coal or what it is, but that energy has to get it to the grid. You need these companies.
What do you think of the copper miners? They may be challenging from the point of view of somebody focused on sustainable investing, but you can't expand the grid without copper. What do you think of the copper miners, like Teck Resources, for instance? Yeah,
so I actually like Teck. We don't hold it in our portfolio. We don't hold it even in our sustainability universe because of the exposure to coal. But the day that we can see that Teck is trying very hard to divest from the coal industry, and once if that happens, I think the copper assets of Teck are very, very strong. We would like would like to be owners of copper mines as much as possible, because it's one of the clearly one of the materials that we're going to need to electrify. Again, it sort of, you have to take into context where we are in terms of the business dynamics and the business cycle. Copper is under $4 at the moment. If I had a crystal ball on the economic cycle, I'd be a little bit more bullish, I guess, on metals at the moment. But as a long-term play, obviously, looking for copper miners that have good ESG practices, because of course, as a sustainability investor, it's nice to like the product, but you have to really be very, very careful, especially in the mining sector, about things like worker treatment, environmental policy, et cetera, et cetera. And of course, we had that the Canadian miner in Panama that got
First Quantum.
Exactly. So these types of ESG issues you need to be very, very careful about.
Okay, the three